then Keith, you and I obviously going into this, we went back and forth. We got Billy on Billy on there too, talking about, the setup and where trade and trend was, and, what we'd be looking for in the data, right? Going into earnings, that would in kind of, conjunction with your process, that would make us maybe incrementally more cautious into the actual earnings event itself, which I believe, and correct me if I'm wrong, but it never really, it looked like it was about to break trade for a millisecond there, but then it kind of bounced back above, and I never really saw a deterioration in the data either. So that kind of, maybe confirmed that things were in fact going to be okay on the earnings event, which looks like it was, especially that it was, trending bullishly on a trend basis. So I don't want to, does that sound right? I mean, I know that was kind of the back and forth we had. Curious what it looks like to you. I mean, obviously it's stocks up a lot.
Yeah, that's precisely right. I mean, and that happens a lot. That's why, being a full cycle investor, it pays to stay with the trends and not get sucked into even the counter trend trades, right? Like you can have, if that were to break, it doesn't mean that they were going to have a bad quarter. It just means that maybe the market's gone down a lot. There's beta. It's widely held now, or it's always been widely held. I guess people certain community puked it at the lows last year. But I think I don't have one hedge fund client actually, when I mentioned Meta being bullish trend, that says back to me it's a short, not one. And I talked to a lot of them. So, long, short, those that run neutral in particular, they're long it. And that's powerful. I mean, it's as powerfully bullish, this move, as powerfully bearish cat is to the downside. I mean, when you're after you've gone up and you make a new high, and you're widely held, that's bullish. I mean, so we'll see. Signal's going to definitely help along the way, and another really nice job by you staying with the trend.
Thank you.
Yeah, it's kind of like, I think GDP's come out. I can't see because I'm in the car, but it's like the GDP had what I talk about, a counter trend move. The trend in growth is obviously slowing. GDP's gone from 12 to 6 to 2 and now to 1. And it's like, January was a quad 1, that was a head fake, right? If you're amazing and you knew that January is going to be a quad 1, and you bought the low of the NASDAQ on December 28th and you sold it on February the 2nd, you're like a god, but because the economy slowed, the trend is the data started slowing again in February, March, and then now again in April. So, people today, when they look at GDP, that's why I say I don't really care about the number anymore. I do because, we write on it and we measure and map it. But, if anything, any kind of a headline that's quote unquote higher, it only makes the sequential GDP number lower for Q2 in our models. So, and people are obviously investing in Meta today on what they think the second and third quarter are going to be, not in what yesterday's quarter was, ostensibly. And the same thing goes for the economy broadly. So just a comment on that.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.